All right, welcome back to Market Day Report. I am Scott Schullett, otherwise known as the Cow Guy. Thank you very much for tuning us in. If that's what you're doing, boy, what a day today is. It's at least it's interesting, right? We're not going to see anybody fall asleep on us here anytime soon. Let's take a look at these markets. If we go over and see what the big board's got in store for us when it comes to corn, let's see what it looks like here. And it's close to unchanged, really. We've rallied back. This was down about 8 or 9 cents. During the radio show I was doing this morning here before we all opened up. I mean, you've got a May price of, it's off a penny, 6.16 and a quarter is last. That really hasn't moved. July's off a penny and a quarter to 6.05 and a quarter. And the Dees, the new crop, that's about where it was last time we checked as well. That's off a quarter cent, one tick to 5.57 and a half. Okay, let's see what soybeans have got in store for us here today. Well, they've come back a little bit. Look at that. May's only down 5 and a quarter cents to 15.01 and 3/4. Got a 15 handle in front of that one. July's off 5 and 3/4 cents. 14.89 evens last there, and that probably wants to take a look at what we've got going on in the new crop. That's really going to be more important. Let's see what that's done for us here. It's down 9 and 3/4 cents, which is about 0.7%, but the price is what you care about. 13.47 and 3/4 is last in those Novi beans. Let's talk about Chicago wheat, the wheat in Chicago. Well, what does that got for us? It's up 8 cents. This has done a big turnaround from this morning. We were 6.87 and a quarter is last. We have been higher, obviously. That's an 8 cent gain in that May contract in Chicago. July's up 8.5 cents to 6.98 and a half. But boy, oh boy, it's been a rough one for wheat as of late. Today it's a lot better, but still we got a ways to go. This is actually kind of giving back a lot of its gains as of today. May's only up 4.5 cents in Kansas City. This is the hard red wheat there. Price 802 and a half. We've got a July board of 3 1/4 cents higher. 7.92 and a quarter. That's all down in the hard red wheat in Kansas City. Let's talk about the spring wheat in Minneapolis. 11 cents higher there. May's up to 8.35 and a half. We've got July up 9 cents to 8.33 and 3/4. And then finally, we were limit up in the cotton last time we checked to see if we're still there. We are in the May. 81.18 is last there. That's up 300 points. And we've got a July board up 290 points to 81.84. Let's bring in Todd Horowitz from Bubba Trading. Todd, thanks for joining the show. He's coming to us live from Las Vegas. I can tell by that background and all the expensive art you've got hanging. Todd, a lot of outside action, a lot of distractions, but it's got really nothing to do with our markets, does it?
Well, I think it does actually have a little bit to do with our market because, again, it's money, right? And you know, the Fed once again getting involved in the bank failures, which I think is wrong. I think if you bail out anybody, you bail out the depositors, not the bank. But I think the street is assuming, based on the market action, that they're going to start to cut rates again, which I don't think is anywhere near happening. And I think this price action is wrong, and I think it'll work out well for the grain markets once we get settled in here. But right now, you just got a lot of wild, crazy action. It's been pretty much that since they opened last night.
Yeah, it's been very crazy since last night. How about where do the investors out there think that we're going to cut rates? I mean, where does that come about from? I mean, tell the viewers what your thoughts are there.
Well, I mean, they have to bail out the banks again, which means they're going to want to bring down rates again, and you know, make it easier for them to have to borrow, and try to make it easier on the taxpayer who really pays for it, right? We know one thing, right? Government and Federal Reserve don't create money; they create debt. And who pays that debt? The American taxpayer. So I think they're trying to looking at it as a backwards way of, well, they got to cut rates now because we're going to have to bail out these banks. And I don't think, Scott, that these are the only two banks. I think there's a lot more coming down the road, which when the markets finally really start to sell off, which I do think they will, I think that'll be very good for the grain markets and the rest of the commodities because money's going to want a place to go. And I think that there's no better place than a depressed market of a consumable commodity.
All right. It's good stuff. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz, Bubba Trading in Las Vegas after this. All right, welcome back. Let's get to the livestock, the proteins, the meats, whatever you want to call them, but we're going to call them down right now. Let's take a look at live cattle in Chicago. Live cattle are going to be down in that June. Let's go to April. April's down 50 cents. Very quiet. 163.77 is last there, kind of in the middle of the day's range. June's off 40 cents to 158.25. We're off between, say, 25 and 62 cents when it comes to the live cattle in Chicago. Let's talk about the feeders for a second. Well, feeders are also lower. We start with April down 97 cents to 196.67. But we have a bigger loss in May, $1.45 lower to 202. 150. Boy, it was only a few days ago. Well, we'll see. But it's still off $1.42 in that May. Let's talk about lean hogs. What do we got going on in lean hogs? That's also lower. April's off by 90 cents to 86.55. And as you go out the curve or the deferreds, whatever you want to call it, we're off anywhere between, say, I don't know, 52 cents to 90 cents in the April all the way out. So that one also just a little bit easier, but not drastically so. That's a good chance to bring back in our guest analyst, Todd Horowitz. He's with Bubba Trading in Las Vegas. Todd, thanks for sticking around. All right, let's talk about the meats here. Does anybody have any money left to buy meat?
Well, I mean, the real issue here, Scott, and prices are high. Why? Because we're at 50-year lows on supply. So those who do have the money to buy are going to pay for it, and it's going to keep prices higher. And I think that we're in that range where we might sneak up to the all-time highs, but I don't think they're going a lot further. I think we're pretty much fully priced here. I don't think they're going to break down yet, but I think they're going to continue to kind of settle like they've done, kind of grind higher, come back a little bit. I think hogs is the one to watch here. If you look at the curve out in hogs, obviously we're getting a much bigger jump finally, and we're seeing some real good contango going into the future, which I think bodes real well for the hog market. And if crude oil does what I think that's going to do, and the markets do what I think they're going to do, I think it's going to be real big for hogs. I think hogs are looking for a big run in the near future.
Well, I mean, that cattle problem that you mentioned at the top, I think that's the real deal. And I mean, the trading god will try to shake you out of your conviction and make you scared that we've got no demand. But I think that we've had a few analysts on, Todd, and they agree with you. And that's going to be a 2 to 3 year problem, maybe a 4-year problem. So we're going to be, you and I have a lot to talk about over the next 4 years. How about that?
100%. Because listen, they don't have the money to get it all done, and that's why they got to go to market sooner, and that's why we're short.
Right. All righty. Thanks for being on, Todd Horowitz, Bubba Trading, Las Vegas.